I think the possibilities of a black swan type event, and we're seeing black swan type events politically across the globe, but in the market, I think it's starting to run very high. And why I said inflation, according to the Fed, is subdued, you just look at the ISM reports. Input costs are rising higher. There's no getting around it. And I don't know why Bernanke doesn't see that. I'm sure he does see it, but there's ulterior motives. One being that China is not interested anymore in buying our treasuries. We had an operation today with the Fed. The indirect bidders, which is places like China, had the lowest participation that's been seen since May of 2007. So obviously the Fed has stepped in an effort to keep the Treasury rolling, and that questions, the political independence of the Fed that they claim that they maintain. Debt ceiling is obviously going to have to be raised. But let's take a look at a couple indicators, of what's going on in the market. The VIX today, while it didn't close at a new low, hit down here a multi-year intraday low at 1468. That's not been seen since the start of 2007. The complacency, the whole buy the dip trade and all that, the complacency is running very high. Not only that, as I showed you before, the corrections to the 50-day moving average showing a healthy bull market. We looked at the S&P 500 and we saw the corrections. There was one correction. If we look at the Nasdaq, there hasn't even been one correction to the 50-day moving average. If we look at the Russell, there's been one recent correction, which is interesting. If we look at the Dow Jones 30, again, one correction throughout this entire run since September. And the Dow Jones 20, and this is kind of interesting, the Dow Jones 20 has made a recent correction, and if you're a subscriber to the Dow theory, take a look at the Dow Jones 20, the transports. Okay, if we see economic activity doing well, we should see the transports doing well because they transport the goods and products that we buy. So the Dow Jones 30 is hitting new highs, and the Dow Jones 20 is not confirming. Neither is the Nasdaq or the IWM, the Russell 2000. If we take a quick look at RSI, over here you can see RSI. We've got a negative divergence up here. Actually, I've got the wrong chart there. Let me pull up S&P 500. Okay, so again, we've got a negative divergence there. On the SPY, we've got the same negative divergence over here. That's kicking in RSI. Another thing we might want to take a look at is ADX. Okay, that's been over 40 and it's turned down. So what that generally means is that the trend is losing strength, that the trend is ending when it hits level around 40 and then turns down. So that's something we want to keep an eye on. If we look at some simple indicators, now you can do this yourself. It's a really simple indicator. Rate of change on price. Here we go. Take a look. Back out a little bit. What do we have here? Negative divergence. And where else have we seen negative divergences? We've seen them over here as we ran into this top. We see one now right over here. And just in case you don't believe this indicator works, and it's a very simple indicator, got a positive divergence right there, right when QE2 was announced. If we back up the market a little bit, again, we can see a positive divergence over here at the bottom of the market. Back up a little bit more, and we see a negative divergence going into the 2007 top. So here's a real simple indicator you can apply to price. The main real problem, I think, that could lead to a really dangerous event, black swan type event, is the fact that we've got these HFT firms, or high frequency trading firms, and what they're doing is, instead of by milliseconds, they're going by microseconds. They're undercutting the traditional market makers and specialists, the providers of liquidity in the market. And we see, of course, volume has dropped off significantly. And when volume drops off, it's just like in an after hours market. You get price extremes. And then when we have some manipulation by the Fed and the primary dealers through their POMO arrangement, we see even more of that. It's even easier to manipulate the market. But what really scares me is that if we have a downside event, a black swan event, or some kind of downside breakdown, we don't have the underlying traditional structure of the market that's always been there to provide liquidity. That's all changed with these HFT firms. So, even though we have circuit breakers, a circuit breaker going off every hour is not going to inspire any kind of confidence in the market. It's going to make things worse. And I think what we see over here from 2008, that crash, I think we could see something a lot worse just because the traditional structure of the market has completely changed. Luckily, though, for us at Wolf on Wall Street, I'm going to clean this chart up a little bit for you. We've identified a segment of the market where we've been doing very well. I showed you a couple trades, but just in the last couple of weeks, we've had 38% trade, 31%, 23, 32%, 15%, 14%. We had a 644% gain in EEE. I'm just going to show you real quick this chart, and I'm going to show you what I'm using at Wolf on Wall Street, which is for our members, and this is my proprietary indicator. They say to make money in the market, you got to see that which others don't see. Now, my proprietary indicator detects accumulation and distribution. So right over here into the lows of November and December 2010, we get a strong burst of accumulation. It leads into a leading divergence, and we get this big run up. Now, we've been able to monitor this trade and collect quite a few percentage points, actually about 644% since we entered the trade on December 29th of 2010. But if I just jump to a 30-minute chart here real quick, guess what I see? Okay, I see confirmation in the trend over here. Okay, we're making higher highs with price, and then we get distribution. Now I just narrow this down. I go down right now. We're looking at a half-hour chart, but I go down 10-minute, 15-minute, 5-minute, and we can narrow it down pretty accurately to where the distribution cycle has started, because this is the way the market actually works. And a lot of people don't realize this, but it's through these cycles of accumulation and distribution. Again, I'll show you on the daily chart, we get a cycle of accumulation, and you saw on the 30-minute chart where the distribution started. So we trailed a stop behind EEE and came up with a 600+% gain in a little over, well, about a month, a little over a month. But even if we look at something like the spiders, I'm going to take a quick look at that with the SPY. We can see how this whole structure works. Actually, I'm going to look at the SP 500. Okay, and I'm going to zoom in a little bit here. And on the S&P 500, this is how this works. Okay, this is real simple, but it is proprietary. We see new lows over here. Okay, 3C is moving the new highs. This is showing us accumulation that's occurring during this zone over here. Let me clean that up again and show you some more. So we got accumulation here, and we've got accumulation here, because this is a relative price divergence. Price is at the same level. We have a higher level in 3C. This is showing us accumulation. We've now seen distribution occurring in the market. Now, distribution doesn't mean that the market automatically reverses, but what it does tell us is that this is how the market works. They buy low and they sell into demand. Okay, and now as we narrow down the charts, hopefully we will come up with a point in which we catch the actual reversal. It's a little bit difficult in a manipulated market and in the averages, but in stocks we have a lot of success. And like I said, we've identified that segment in the market where we're hitting really strong percentage gains in a week or 2 weeks, sometimes double-digit gains in a day. So anyway, go to tradeguild.net. Check out at the top right-hand side of the site. Wolf on Wall Street. That's our member site. And there's information about Wolf on Wall Street. You can read what members have said about Wolf on Wall Street. And if you want to check it out, you want to subscribe and try it out. I cover the market all day. I give you updates all day. I give you email support. You want to know about a trade, it's there. We have trade lists for both regular trades and speculative trades. And there's just a lot of value, I think, in Wolf on Wall Street. So take a look at that. It's at tradeguild.net. At the top upper right hand corner, there's about 4 links to that. And if you decide you want to try it out, or if you have questions, just go ahead and email me. I'm really wanting to help people in the market. This is my full-time gig. Like I said, I update the market probably 10, 14 times a day on that website, plus add trades. And you know, I want to see people succeed in the market. But unfortunately, the market has changed, and if you're going by traditional technical analysis, it's being used against you. You know, these patterns that you've learned over decades through books and all that. You know, probably 85% of them in uh, the bigger segment of the market, they get run. They get false breakouts, false breakdowns, and 3C will show us a lot of that stuff. So you have to look at the market in a much different way, and especially now, you really want to be up on your risk management, and you really want to keep an eye. It's not just buy the dip anymore. It's getting serious. There's a bubble emerging here in assets, and I just want you all to be careful, and that's why I did this video. So check out tradeguild.net. I hope everybody has a great week, and check out Wolf on Wall Street. I hope we see you there. Take care.